If you've been watching XRP this week and thinking nothing really happened, you're not wrong on the surface. Price didn't explode, there was no dramatic breakdown, no wild volatility. But underneath that calm price action, one of the most revealing weeks for XRP and Ripple played out. And it split the story cleanly in two. On one side, Ripple quietly pushed further into Europe with another regulatory breakthrough. On the other side, the United States once again delayed crypto clarity, and in doing so exposed something deeper, a lack of agreement, even within the crypto industry itself. And when you put those two things together, XRP's behaviour this week suddenly makes a lot more sense. If you're new here, hi, I'm Paula. On this channel, we don't just talk about charts, we talk about regulation, liquidity, macro forces, and everything that connects. So let's walk through what actually mattered this week and why this wasn't a boring week at all. We've already covered the UK regulatory angle in detail in previous videos, so I'm not here to repeat that story. All you need to remember is this. Ripple already laid out its UK regulatory groundwork. That part is done. This week wasn't about the UK. This week was about what came next. What quietly happened this week is that Ripple received preliminary approval for an electronic money institution license in Luxembourg. That might not sound exciting at first, but in regulatory terms, this is a big deal. Luxembourg sits right at the centre of European finance, and more importantly, it operates under the EU's MiCA framework. That means once this license is fully approved, it can be passport enabled across the entire EU and EEA. Not one country, not a test programme, 27 countries. This positions Ripple to scale regulated payments across Europe under a single, harmonised framework. Something that very few crypto companies are capable of doing. Ripple leadership has been clear about what this enables. Real-time, 24/7 payments and a bridge away from slow legacy financial systems. This isn't marketing. It's infrastructure being built quietly in the background. Now here's the distinction people still struggle with. Ripple expanding does not automatically mean XRP pumps overnight. That's not how infrastructure adoption works. What licenses like this do is change the long-term role XRP can play, particularly in regulated institutional environments. Ripple payments already reach the majority of global FX corridors and has processed tens of billions of dollars in volume. Institutions don't care about narratives. They care about compliance, counterparty risk, and legal certainty. And those decisions take time. Which brings us to how the market actually reacted. While the broader crypto market saw heavy outflows this week, XRP didn't follow the crowd. In fact, XRP saw meaningful weekly inflows, even as digital asset funds overall bled capital. But here's the key point. XRP didn't spike, it held above key levels, with balanced trading, without euphoric volume. That's the signature of positioning, not speculation. On-chain data supports this. Neutral to constructive accumulation, no distribution signals, no panic. This is what it looks like when capital is waiting, not chasing. Now let's flip to the other side of the coin, because while Ripple was making regulatory progress in Europe, the United States did the opposite. The Digital Asset Market Structure Clarity Act was expected to move forward this week. This bill was supposed to finally answer some of the fundamental questions. Who regulates crypto? How are digital assets classified? And what rules do companies need to follow to operate legally in the US? For the first time in a long time, it looked like momentum was building. And then, right before the Senate Banking Committee was due to move the bill forward, Coinbase pulled its support. That single move was enough to stop the entire process. No markup, no amendments, no vote, no new timeline. Just another delay. This wasn't a minor objection. Coinbase's CEO said the bill in its current form was materially worse than the status quo. That's a strong statement because the status quo is regulatory ambiguity, enforcement by lawsuit, and years of stalled innovation. Their concerns are focused on tokenized assets, stablecoin reward restrictions, data privacy, and the possibility of too much authority shifting towards the US Securities and Exchange Commission. Whether you agree with Coinbase or not is almost beside the point. What matters is the signal this sent. Because suddenly the problem wasn't politics, it was industry division. Crypto couldn't present a unified position, and lawmakers don't move fast when the industry itself can't agree on what it wants. This delay reinforced something the market already suspected. The US still doesn't have a clear, predictable regulatory path for crypto. And more importantly, even when legislation gets close, it can unravel quickly. From a market perspective, that does two things. First, it keeps a regulatory discount on US exposed assets. Second, it pushes serious capital towards jurisdictions where clarity already exists. And that's where the contrast with Ripple becomes impossible to ignore. While the US debates definitions, Ripple secures licenses. While lawmakers argue hypotheticals, Ripple onboards institutions. While the Clarity Act stalls, Europe moves. The Clarity Act delay didn't cause panic selling, but it also didn't spark euphoria. Instead, it reinforced a holding pattern. Capital didn't leave XRP because Ripple's business is no longer dependent on US timing, but it didn't rush in either because US clarity still matters for full repricing. So you got exactly what the market delivered. XRP holding key levels, steady inflows and quiet positioning. That's not indecision. That's risk-aware capital management. For years, the assumption was simple. Once the US gives clarity, everything changes. But this week showed something different. Ripple is proving that clarity doesn't have to come from the US first. Liquidity is global. Payments are global. Regulation is becoming jurisdiction-specific. And XRP is starting to reflect that reality. If this week felt underwhelming, that's understandable. But quiet weeks like this are often the ones that matter most in hindsight. No panic, no hype, no blow-off moves. Just regulatory progress in Europe, delay and uncertainty in the US, and steady accumulation in the background. That's not a top, and it's not a bottom. It's a transition phase. So yes, this week really was a two-sided coin for XRP and Ripple. On one side, Ripple continues to move forward globally, building inside regulation. On the other, the US continues to debate, delay and disagree. And XRP sits right in the middle, not pumping, not dumping, just positioned. Markets like this are always where you need a plan, and it's where trading without a strategy becomes really dangerous. So if you want to know the exact strategies we use in the Crypto Wolfpack to make money in both the bull market and the bear market, we've made a completely free trading course for you. The link is in the description. If this video helped you to see the bigger picture, make sure you like it, subscribe to the channel and let me know in the comments. Do you think Europe will outpace the US when it comes to real crypto adoption? Thank you so much for watching and I'll see you in the next one.